Questions in markets related to Bitcoin, little b for the currency, and Bitcoin, big B for the network. A collective journey to understand, apply, and use this innovation, all Bitcoin, all the time. And I'm your host, Christine Lee. Checking in on Bitcoin right now, the XBX price trade at $58,910. Bitcoin is up about 1.3% over the past 24 hours, according to TradeBlock data. The XBX has been the most reliable Bitcoin reference price for institutions since 2014, with billions of assets under management benchmarked against it. All right, so what could be contributing to Bitcoin's price rise? We have some bullish news today. MicroStrategy buying $15 million worth more of Bitcoin, according to the latest SEC filing, bringing their total stash to $2.2 billion worth of BTC at an average price of just above $24,000 per coin. For those keeping track, the business intelligence firm has made Bitcoin its main treasury reserve. Meanwhile, Coinbase will begin the public trading of its stock on April 14th with the ticker COIN on the NASDAQ. Prices for shares of the highly anticipated listing are predicted to be between $300 and $350 in that range, valuing the crypto exchange at about $100 billion. And finally, our top story of the day, Grayscale Investments saying it's 100% committed to converting its flagship Grayscale Bitcoin Trust, GBTC, into an exchange-traded fund. In a blog post, Grayscale is owned by Digital Currency Group, parent company of CoinDesk. The U.S. approval of Bitcoin ETF has remained elusive, even as Canada and Europe have green-lighted several products.
The chart of the day is brought to you by Crypto.com, the world's fastest-growing crypto app.
All right, institutional growth into Bitcoin is slowing down while retail activity is picking up, according to the latest quarterly report from the CoinDesk research team out Friday. But we'll give you an early look. In this chart, we see one indicator, the Chicago Mercantile Exchange's BTC futures. Volume growth hit a high of $2.1 billion, but it tapered off in March. In the chart below, we see open interest in the market peaking in February as well, while the overall trend is up. We do see a bit of a cooling down over the past month. And joining us now to discuss further is CoinDesk Managing Director of Research, Noelle Acheson in Madrid. Welcome, Noelle.
Hi, Christine. How are you today?
Very well. Good to see you. All right. So I got to catch a glimpse of the first quarter report on the crypto markets that you'll be releasing at the end of the week. So what is your assessment of Bitcoin futures on the CME, and take us through the open interest and what it might tell us about institutional growth as well as retail activity?
Absolutely, Christine. One thing that we discovered while preparing this report was we saw signs that the institutional surge that arguably drove most of the growth of the crypto markets in Q4 was still growing. They were still there, but the growth was starting to wane slightly. And we also saw signs of retail involvement picking up. So the story that we have seen is that institutions are still very active in the market, but perhaps at less so than before, but with it decreasing growth, while the retail participants are starting to come in.
All right. We also see this chart that's up. BTC futures overall were flat with occasional spikes. Another sign of slowing institutional interest?
Yes, that's right. And as we saw in the previous chart, as you pointed out, the CME is largely an institutional exchange, and we did see a slight trailing off there. And that is repeated in this chart here. We see a surge in the top part of the volumes on derivatives exchanges, on the futures exchanges, but we see it leveling off for most of Q1. Now, bear in mind, the C is just one component of this. So a lot of this, the pickup comes from some of the more leveraged exchanges, such as Huobi and Binance, and that is reinforced in the growth of open interest, which you see in the bottom part. When you have volumes leveling but open interest increasing, that is an increase in leverage. The offshore exchanges such as Binance and Huobi offer much more leverage than exchanges such as the CME does, and that does hint at greater retail involvement as well as more trading participation.
Finally, Finally, we have a chart on the ratio of spot to futures volumes. Walk us through what this tells us about investor activity.
This reinforces the other trends that we've been seeing, Christine, because institutional investors and long-term holders tend to favor spot exchanges. And so when the ratio of spot volumes to Bitcoin futures volumes starts to decline, that's yet another sign that market activity is shifting towards more trading activity rather than long-term investments. And this points to the...
All right, sorry, Noelle, go ahead.
So this points before they said the overall narrative that the institutions are no longer going forward going to be the main drivers of the crypto market growth, and this is a perfectly natural evolution in the current cycle that we're in.
All right, but we're seeing institutional investments slowing down, but isn't the overall trend up for the year or going in that direction? Is that correct?
Yes, institutional investment slowing down, but again, it's all relative. It's slowing down from a very, very fast acceleration. We saw the surge in Q4 that these charts have shown. We saw the surge continuing in the first part of Q1, and we all remember that massive Tesla buy, which no doubt has distorted some of the figures. There have been many other big buys as well. But the retail investors that were largely absent in Q4, they're coming in now. And we can see this in other charts in the report as well that show that smaller holdings are growing faster than larger holdings, and that the transaction levels also indicate greater holding activity rather than churning activity, which speaks to more retail investment rather than just trading.
Okay. Open interest on retail-focused exchanges like Binance and Bybit have accelerated activity. You know, in 2017, we saw that investment was retail-driven as well. Is there any concerns of a bubble?
People have said that Bitcoin's in a bubble now many, many, many times, and there has never been a bubble that rises and falls like Bitcoin has. This is a natural evolution of cycles. Bitcoin does tend to move in 4-year cycles. This is another trend that we saw while preparing this report. And we are in the upswing part of the current one. They do tend to move in harmony with the halvings. The rest of the crypto market tends to follow suit as well. Even though they may not have the halvings, they will tend to attract the same benefit from the interest that Bitcoin attracts. And so, no, I personally do not believe that this is a bubble. I do believe it is a natural evolution of the markets. Plus, we have so many other fascinating trends that reinforce that. The growth of interest in NFTs, for instance, is bringing in a totally different mainstream audience than we saw in 2017. And this is not even drawing on the fact that the infrastructure for both institutions and retail investors is on an entirely different level from back then. It doesn't feel frothy just yet.
All right, mass adoption, it's a process. Thank you so much, Noelle, for giving us an update on your report.
Thank you, Christine.
All right, that was CoinDesk Managing Director of Research, Noelle Acheson. Her department's comprehensive report, complete with over 100 slides, covers the main first quarter developments in Bitcoin, Ethereum, DeFi, stablecoins, and NFTs. It's available for download from the Research Hub at CoinDesk.com. Coming up, we'll talk more about Grayscale's commitment to a Bitcoin ETF with the CEO of Grayscale, Michael Sonnenshein. Denise, I'm getting an Welcome back. Grayscale Investments saying it's 100% committed to converting its flagship Grayscale Bitcoin Trust, GBTC, into an exchange-traded fund. And joining us now to discuss further is the CEO of Grayscale, Michael Sonnenshein. Welcome, Michael.
Thanks for having me.
Great of you to join us. All right, so Grayscale filed for a Bitcoin ETF in 2016 and spent a good deal of time in 2017 in talks with the SEC. Ultimately, Grayscale withdrew the application, believing the regulatory environment, quote, for digital assets had not advanced to the point where such a product could successfully be brought to market. So has anything changed, Michael? Are regulators any closer to getting more comfortable with approving a Bitcoin ETF?
I think for us, the announcement that we put out this morning was really to ensure that investors know that we're committed to converting GBTC into an ETF. As you shared, we kicked off this process back in 2016. We spent the better part of 2017 in SEC registration, but we ultimately realized that the regulatory environment was not yet ready to approve a Bitcoin ETF. And so we wanted to ensure that the community as a whole knew that, one, we were committed to converting GBTC into an ETF. That's long been our conviction, and that's really never wavered, dating all the way back to 2013 when we launched the Grayscale Bitcoin Trust. And we continue to work proactively with the regulatory community and are encouraged by a lot of the developments that we've seen in and around the digital currency asset class, and just want to make sure that investors know that we're working on it and we're doing everything to prepare for what eventually will be a Bitcoin ETF.
What is the process for converting a Bitcoin trust into an ETF? Is it just a matter of filing an application with the SEC? And if so, will you re-register with the SEC?
One of the big differentiators, Christine, about Grayscale Bitcoin Trust versus a lot of the other investment products that are out there or those that have been filed in front of the SEC is the fact that Grayscale Bitcoin Trust already has a long track record and not only became the first publicly traded Bitcoin investment vehicle here in the US, it also became the first of what are now two SEC reporting companies. So in many ways, Grayscale Bitcoin Trust, while today is not an ETF, definitely adheres to the same reporting and disclosure obligations that would be necessary for it to operate as an ETF. And so what would happen if it were to be approved is it would move up to a national securities exchange like the New York Stock Exchange or NASDAQ, and it would have simultaneous creations and redemptions like you'd see in other ETFs.
Does this give you an advantage with the SEC for a Bitcoin ETF approval that may not exist with other firms filing applications?
We're super confident in our positioning with the SEC and certainly feel that Grayscale Bitcoin Trust has been a pioneer, not just in amassing a lot of assets, but really acting as a conduit for investors to get exposure. And we did have to work very proactively with the regulatory community in order for it to become an SEC reporting company and have that level of reporting obligation and disclosure. And so it is certainly a differentiator, the fact that the product does have a track record, already has assets, and already has quite a bit of liquid trading volume, which I think now totals to about $2.5 billion or so in weekly notional trading volume.
Several firms have submitted Bitcoin ETF applications, VanEck in December, followed by Valkyrie, NYDIG, WisdomTree, Skybridge, among others. The SEC VanEck's Bitcoin application, published rather, VanEck's Bitcoin application on the website, yet Grayscale is expressing confidence in the firm's current positioning and engagement with SEC. So my first question is there any concern over first mover advantage? And what are the talks you're having with regulators right now?
Well, I think regulators have been very proactive in establishing some elements within the Bitcoin market that they would like to see mature before they're going to be comfortable approving ETFs. We've seen this in previous denial letters for Bitcoin ETF applications. And this is things including a domestic surveillable market here in the US. surveillance sharing agreements between Bitcoin exchanges, and also seeing significant markets. And while we're super encouraged by the growth and the development of the asset class and all the infrastructure that's being built, it is likely to be a little bit too early still for some of those elements to have matured to a place where regulators can be comfortable. That being said, in the meantime, the market, the investment community as a whole, should be encouraged by the operations of a firm like Grayscale and GBTC, because we're actually using existing regulatory frameworks to operate our products today. And that does include engaging with the regulatory community.
Mm-hmm. Switching topics, we just spoke about institutional activity in the space. And so are you seeing it pick up or slowing down? Last month we had to do this because the premium was collapsing.
The price at which GBTC trades in the public market each day is going to be completely subject to market forces. Historically, GBTC did trade at a premium to its net asset value. Currently, it trades a couple percentage points below its net asset value, and that's not atypical for products like GBTC, of which there are dozens and dozens of them in the market, where the price at which the shares trade do fluctuate with the net asset value. Ultimately, however, we would expect that in an ETF format, that the product would have authorized participants, which would be able to arbitrage away any differences between the ETF share price and the product's net asset value, which is what you typically see in most ETFs. But no, it has not really affected interest in the product in the meantime.
All right. Michael, would love to hear your outlook on Bitcoin, if you have a price target.
Thank you. Oh, well, come on. We don't do price targets. I would say that when we think about you can ask. I would say when we think about some of the items that we're encouraged by in the market, a lot of it today focuses on infrastructure, the development of greater on-ramps, both by up-and-comers and new entrants from the crypto ecosystem that are native, as well as from traditional financial services players that are now being able to offer crypto services to their investors. And so we certainly think last year, a lot of that momentum has continued into 2021 and are definitely encouraged by who's participating in the market.
All right, Michael, thank you so much for joining us and offering your insights. Appreciate your time.
Thanks.
That was Grayscale Investment CEO Michael Sonnenshein. And that's it for All About Bitcoin. I'm Miss Christine Lee. Join us tomorrow morning at 9 a.m. in New York for First Mover, your first look at the day's global crypto news headlines. You're watching CoinDesk TV. sound okay?
Yeah.
It sounded weird, or?
No, I think it depends on what your benchmark is. Do you have kind of register?
Yeah.
You have? And
What else? You mean? I mean,
one, I direct